Hello and welcome to Inderes TV. Kalmar started trading as a standalone company following the completion of the partial demerger of Cargotec Corporation yesterday. We have published an extensive report on Kalmar, and analyst Erkki Vesola is here to tell us a bit more about Kalmar. Hey, hello Erkki.
Good day to you, Pia.
Could you start by explaining what Kalmar does and who the customers are?
Kalmar, traditionally it has been more or less all about container handling, but nowadays they more or less or use more the phrase heavy material handling. But if we start from container handling, the machinery is about machines named straddle carriers, container stackers, and shuttle carriers, and then terminal tractors, forklift trucks. And these more or less you can see the term container almost all over the place, but it's heavy material handling, and the customers traditionally had then been more on the port side, so bigger and smaller ports. But in the recent 10-15 years or so, the role of inland terminals has increased, and also other customer groups have gained ground, like heavy logistics, that is very often linked to construction, etc., and even logistics or distribution chains, and this may be even linked to retail. So the customer group is actually very dispersed among different industries, and Kalmar's market position is almost everywhere where they operate, they are leading or one of the leading three companies. So they actually have a very strong position globally. So
a huge business then.
It is.
What does the market outlook look like, and what megatrend supports the market development?
According to the KPMG report that we see in the prospectus, the market equipment side is expected to grow by some 5% per year until 28, and of course it's linked to GDP growth globally. But the drivers are, for instance, electrification of the equipment. Of course, you have to cut emissions. That is almost by definition that something that the customers demand. And then there's, for instance, lack of personnel or lack of professionals using this equipment, and there you need more automation. And then the logistics chains, as such, they have a kind of the logistics word has changed, mostly linked to COVID. You see that you cannot put all your eggs in the same basket, but the logistics chains have kind of diversified more. They have been more localized than before, and of course, the more local you get, the more equipment you need to move things.
Of course. Yeah. So, what is Kalmar's current market position? You already mentioned that it's among the top three in most of its, or in all of its operation areas. Are there any opportunities to improve this further?
There are actually. Kalmar's position, especially within electrified equipment, is very strong. Their offering is the widest in the market. That's one thing, and of course, the competition as such is kind of fragmented. If Kalmar has 6 main product categories, no competitor can offer more than 3 of those. So it's very diversified as such. Electrification is one thing, because the market for electric equipment is expected to grow, was it plus 28% per year until 28, as the whole market is expected to grow 5%, and that's where Kalmar's position is actually very strong. And the other thing where they can improve is service, because they have got an installed base of 65% pieces of equipment out there, and for instance, when it comes to spares and wears for that equipment, the Kalmar really has an a possibility to improve their share there. They actually neglected this segment to some extent, but now they are focusing heavily on that one. And then when it comes to new services, we talk about connected equipment, i.e. around 1/5 of this 65,000 installed base is connected to internet. And when it's connected, you can offer new services where the customers can follow, for instance, the usage of their equipment and the condition of the equipment. And there, Kalmar really has new opportunities to come up with new service offering. And then the third area would be electric equipment. Of course, that equipment, by definition, it needs less maintenance than traditional ICE equipment. But there you can, it's maintaining those, it's more demanding. So you can, Kalmar can kind of replace either smaller mom and pop shops in maintenance or in-house maintenance due to this, the demand or how demanding the maintenance is there. And of course, offering new services like battery change and loading services, etc. So there are opportunities there as well.
Yeah, so also quite a lot of potential on the service side through already existing equipment base.
Indeed.
Yes. So what about the strategy and financial targets? What do they look like?
The strategy is more or less linked to issues that I already took up. Electrification is one key component of that, and then automation, and because the industry suffers from a lack of trained personnel, so automation can kind of be a remedy to that problem, and then the services, as I already said, new spares and wears, and or improving their share of spares and wears, new services, and electrification. And the third pillar is their strategic programs. They talk about, for instance, commercial excellence and operational excellence programs. They have not opened up these that much, but of course they aim at improving their margins or improving their return on investment. But these are mostly linked to, for instance, pricing and streamlining the logistics chains and their sourcing, etc. But that's where the company has promised that they will open this up a little bit more during the latter half of this year.
Okay. And the financial targets?
Their growth target, sales growth target is 5%, which may sound a little bit modest, as I said in the beginning, that the market is expected to grow by the same number. I can see that there is a chance that they will slightly outgrow the market and take market share just due to their strong position in electric equipment and the opportunities that they have on the service side. When it comes to profitability, 15% EBIT margin target by 28. That's not that bad or that demanding. They already, or their comparable margin last year was 13. But of course this year it will come down a little bit because sales will come down. This is still quite volume dependent on the moment. The margin or the operating leverage is quite high. But going forward, when the volumes grow and these excellence programs gain momentum, we see that their margins by 27 they should stand somewhere between 13.5% and 14%. So going towards that target that they have set. Third target is 25% ROCE, which that may sound quite demanding, but they are kind of asset light. They have their production is very much, or to a large extent, outsourced. So their own structure is asset light. And for instance, last year they already made 24% ROCE, And in our estimates, they can exceed the 25% target already by in 26, 27. Of course, then thereafter it will probably start to decline slightly, but it's within reach.
Yeah. So the targets are, most of them are reachable, and you feel that, or your own estimates are close to.
Yeah, they seem fair targets,
Yeah.
I would say.
Okay. And then finally, well, no, actually, not finally. First of all, one more question before finally. The market risks and Kalmar's risk profile, what are they like?
If we start from the risk profile, we were interested to see how the regression of this business looks. We took a 10-year linear regression. It seems that the predictability, judging by the results of the regression, the predictability of Kalmar's result is actually very good, because the R2 in this regression was 85%. So you can almost, with a very good predictability, you can make estimates. If you have a good estimate for the sales, so the profitability will follow suit according to this regression. So when there's good predictability, so then the risk profile is quite low. And of course, Kalmar's balance sheet is strong as well. Around 150 million euros net debt at the end of March. So it's very, very much, they can handle it quite well, and they could actually take quite a bit new debt and still be within their targets when it comes to indebtedness. But when it comes to risks, market risks, I would say we had talked about electrification. If the trend that has been that we have or KPMG has forecasted, if the trend is not as strong as it seems to be, so that of course would hit Kalmar a little bit harder than an average competitor.
Right.
And of course, when there are Chinese competitors, there's the risk that they get rogue, especially in terms of pricing in different market areas or product areas, and that of course is a risk, because if pricing gets tight, of course it will hit Kalmar's margins as well. Those are the two main risks I see currently.
So some risks, but clearly more opportunities than any huge risks on the horizon. And now finally, what does the company's valuation and recommendation look like?
We have started the coverage with buy recommendation, €36 target price. Well, in the opening day, the stock went haywire. It went pretty much up or heavily up and down. But when it comes to valuation, for instance, a risk-adjusted return. Okay, if we take the total return, is around, we talk about expected share price change and the dividend yield, so it's 24%, as the required return is 10%. So there's a quite nice gap there. So the risk-adjusted return is actually very favorable. When it comes to peer group comparison, if we take 25 multiples, be they EV/EBITDA, PE, so there is a discount from 10 to almost 30%. So quite clear upside there as well. And finally, when it comes to DCF, or discounted cash flow model, the upside is as high as 50%. So it was a no-brainer to give a buy recommendation for the share with that €36 target price.
Great. Thank you, Erkki.
Thank you so much.
A market leader with quite a good potential. You can read more in the extensive report. You will find the link in the description.